Hi guys, I'm Michael and this is Ewan, and we're going to walk you through the Modano Financial Modelling Fundamentals course. Now this course is a course we've developed specifically to teach people how to go from never having built a financial model to building an integrated three-way financial model. Now a lot of people actually have never built a three-way model. It's called a three-way model or a three-statement model because it contains an income statement, balance sheet and cash flow. It's called an integrated three-way model because there are formula links between those, so changes to one change the other and they all flow together like a moving beast. Very few people in the world actually understand how to do this. We've delivered this course over 20 years to thousands and thousands of organisations, from top-tier investment banks and accounting firms through to corporate strategy teams. We've basically created this course because we think it's a skill everybody should have, whether you're a business owner or an advisor. And we want more people to have the skill because it makes it easier for us to work with them when they're actually using Modano. So it's in everyone's interest that we teach people this stuff. We've called this Financial Modelling Fundamentals because it is the fundamentals you need to model any business. So if your ambitions are to become an M&A advisor at an investment bank, or to do an FP&A model for a strategy team, or it's just to do some basic forecasting of your own business or some budgeting and planning, the fundamentals are all the same, and we're going to cover them in this exercise. You basically don't need any software installed other than Microsoft Excel, the desktop version. You don't need Modano installed. All the files are provided. This is all done via our website. It's done in multiple stages, and each stage you can upload your model as you're building it and make sure you're on the right track. So it should be very straightforward. You can obviously fast forward and pause this video as necessary. Now, to get started, the model we're going to build is going to be a model of Apple. Now, we've chosen Apple because it's just an awesome company. We all understand it. You could build the most complex model in the world of Apple, but you could basically build on what we teach you in this exercise. This exercise is basically going to teach you how to build the fundamentals of a three-way model. Now, Apple, at this point in time, is a $2.3 trillion company. It's worth more than like 90, 95%, 96% of countries in the world. So it's a cool company. It's a cool company to model, and we're going to use their Form 10K. So the Form 10K is in the United States. Is there basically the SEC submitted annual report. It's a bit of a dog's breakfast, to be honest. It's not a pretty annual report, but it's realistically what you often have to deal with when modelling companies when you don't have access to their financial data, when you don't put to their inside information. To do this course, a lot of this is online, but there is a PDF you can download if you'd like to actually view it, and obviously watch this video while you're going. The model itself is just going to be if you look at my screen, it's going to be an annual forecast only model for 5 years. Now, Apple actually has a different year end each year, depending on, but obviously it's a retail business in many regards. So the year end basically falls on a certain day. It's the last Saturday of each September. We are going to assume that away for now and just make the financial year end 30th September. Keep things simple. Doesn't make a huge difference, but that's obviously bear that in mind. And the files you will need while doing this, we're going to start with an empty file, which is this learning exercise workbook. Just click the download starting model workbook at the start of the financial statement section when we get started, and that's how you access that file. We also have a Modano Financial Statements Impacts Analyzer file, which we're going to introduce in a moment, which basically we use to understand the impacts of financial statements when you're building a financial model. And if you like, you can download the Apple Annual Report, which we've put a lot of references to it in the materials and photos from it. But if you can download it if you want to get excited and learn a bit more about Apple, it's a pretty interesting read when you're talking hundreds of billions. So basically, and that explains why Apple. We chose Apple because a lot of times over the years we trained, for example, Goldman Sachs, and they said, we're building a hypothetical company model. We want to build a real model. So we thought, okay, let's build a real model. Why not choose the biggest company in the world? And the process does highlight a lot of the things you'll need to understand when advising a corner store. Building a model of a $1 million turnover business or a startup. They're exactly the same. It's just this is a lot more fun because the numbers are so extraordinarily big. Now, the financial modelling components, something we want to get across in this course is that it doesn't matter whether you're, say, using Modano and you're using modular financial modelling to automate this process, or you're building it completely from scratch. The best financial modelers in the world, they use modular financial model development. And what that means is you think about your model as a bunch of interrelated pieces, but each piece you understand. So in a project finance model, for example, you still have the time series part of the model, and you still have the revenue forecasts and the capex forecasts. Then you have the funding pieces and the debt facilities. It's all pieces, and we call that modular financial modeling development. Now, this is something you really need to understand to build financial models properly. It's something I was taught as an investment banker by some really smart associate directors and directors that I worked with that all the best modelers use. So in this exercise, Ewan's built some pretty complex models. He hasn't done this course before, so we thought it'd be great to throw him in the hot seat and I can guide him through this training course. the image I've got on my screen right now is what a basic 3O model, forecast-only 3O model looks like. It has an opening balance sheet. The different colours show different areas, like the operational revenues and expenses, working through working capital, debtors and creditors and inventory. And then we have things like fixed assets, capital, corporate taxation, and ultimately everything leads into the three-way financials, and that's the integrated 3O model. So in this course today, we're actually going to work through 7 different areas of the financial model, and we want to encourage you to think about building every model you build this way, because this is the analysis I use when I'm building a complex LBO model or M&A model or multi-entity console. It's the same thought process, and that is, we start with the financial statement shells, and then we bring things into the financial statements, and each piece we bring in has to balance and has to make sense. Okay, and that's the process of building a three-way, and that's something you really need to do from scratch once in your life. We always say so you never have to do it from scratch again, because it's a tedious, painful process building models from scratch. But once you've done it, you'll never look back, and you'll be able to pick up a model someone else has built, and you'll be able to dissect it using this same fundamental information. So what we're going to go through in this course is basically the approach you would use to build a model or break down an existing model from scratch and get a visual map of how it works and understand how the links and flows work. Something we should note is that we are going to build everything directly into the financials. Now, we're going to provide a more complex example of an Apple model. It's still simple, but more complex in terms of how you'd properly build it at the end. And when I say that, what I mean is in a proper financial model build, you would forecast revenue on, say, a revenue output sheet or on a sheet where the outputs are calculated, and then you would link the outputs of your revenue, which might be hugely complex calculations, into your financials. What we're doing in this exercise is we're building the revenue straight into the financials, because we want to get this course done in an hour or 2. We're not sure how long it will take, and we're hoping sort of somewhere between 1 and 3 hours, which is pretty amazing what it will teach you. But to do everything properly from scratch takes a lot of time. So bear in mind, we are building straight in the financials. In a real life model, you actually want to build outside the financials, then bring into the financials. And you can see an example of that by downloading the modular example at the end, which will show you how we'd actually do this in a real life scenario. The numbers are exactly the same. It's just a best practice approach difference. Okay, so on that basis, we don't open the starting workbook yet. We'll do that when we start building the financial statements, but I'm just going to show you here, we are going to give you a starting model that contains basically the empty shell. And we've done this again to save time. We'll open this in a moment. The starting model just contains some basic infrastructure, which we're going to walk through when we get started. And off the back of that, we're going to build the financial statements and the entire, effectively the engine of the financial model from scratch. So let's get started.